Welcome back to Smart Stock Sam. And if you've been following this channel, you already know we called it. Last week, we laid out a precise thesis on Iren, a structural floor, an institutional accumulation play, and a coming catalyst that most of the market had completely missed. The smart money was quietly loading up while retail investors were running for the exit. Today, we're going to show you exactly how that prediction played out, why the biggest institutions on Wall Street are still aggressively buying this stock, and what a single event happening this coming Friday could do to the share price if you're not already positioned. We're talking about whether Iren stock is worth buying right now, and by the end of this video, you'll have a price target, a defined risk level, and a clear game plan for the week ahead. So let's get into it. Last week was the ultimate stress test for everything we laid out on this channel. We entered the week with 3 pillars: validation of our price levels, a rock-solid fundamental anchor, and an upcoming catalyst that changes the entire game. And despite Bitcoin sliding and retail panic spreading, the bullish structure for Iren didn't just survive, it was confirmed. We are now moving out of what I've been calling the ugly transition phase and stepping into what I call the institutional dawn. The question isn't whether the pivot to AI is happening. The question is, what happens to the stock price the moment the broader market finally wakes up to the fact that this build-out is already fully funded? Now let's look at the numbers, because the precision of last week's price action is honestly staggering. In our February 16th video, we identified a key entry zone between $42.25 and $42.50. On Wednesday and Thursday, the market tapped those levels almost perfectly, surging to a high of $43.73. For those following the neckline break, that was immediate, clean upside. But here's the critical part. We set a hard stop loss at $39, even with Friday's 7.65% sell-off, which felt like a disaster to a lot of people. The stock bottomed at $39.53. It never breached our floor. The model correctly identified where the smart money accumulation zones were sitting, and the bullish structure came out of last week 100% intact. So why didn't we hit $49 last week? 2 words: crypto pain. Bitcoin retraced to $67,000, and because Iren's legacy mining segment still accounts for roughly 90% of its current revenue, that acted like a dead weight on the stock. On top of that, trading volume dropped 40% below average on Thursday. Retail momentum simply paused. But here's a question worth sitting with. What were the institutions doing while retail was frozen in fear? Because the answer might surprise you. They were buying aggressively. When the price dipped toward $39, it didn't linger there. It snapped back in a sharp V-shaped recovery. That is the unmistakable signature of institutional defense. The big funds are treating $39 as a value floor because they are looking past the current Bitcoin volatility entirely. They are focused on something much bigger, a multi-gigawatt future in artificial intelligence infrastructure. And that structural floor is now your safety net as we head into the week ahead. And it's not hard to understand why they're so convicted when you look at the fundamentals. Iren holds a $9.7 billion 5-year contract with Microsoft. Think about what that actually means. This isn't a vague partnership announcement. This is a guaranteed revenue stream that fundamentally stabilizes Iren as it pivots from the boom and bust cycle of crypto mining into the high-margin world of AI cloud services. This single contract de-risks the entire capital-intensive transition. It's the reason analysts are no longer calling this a mining stock. They're calling it AI infrastructure. And Microsoft is just the beginning. Iren holds 4.5 gigawatts of secured power capacity. Here's what's wild about that number. Their current target of $3.4 billion in AI annualized run rate by the end of 2026 only uses 10% of that capacity. 10%. That leaves 4 gigawatts of completely unmonetized upside sitting on the books. While other companies are scrambling and fighting over power access in the AI build-out, Iren already owns it. They are barely scratching the surface of what they have. Now I know what some of you are thinking. All of this sounds great, but how do they fund it without diluting shareholders into oblivion? Here's the retail myth that needs to die. Iren does not need to dilute to grow. They have between $2.8 billion and $3.26 billion in cash available right now. Layer on top of that a $3.6 billion GPU financing facility at less than 6% interest, and the math is simple. The build-out is already paid for. Dilution fear is a story for people who haven't read the balance sheet. Institutions have, and that's exactly why they keep buying. Speaking of which, let's talk about who is actually buying the dip. Cantor Fitzgerald added 3.3 million shares on February 17th. D.E. Shaw and Goldman Sachs combined loaded up over 15 million shares in Q4. Currently, 463 institutional owners control approximately 45% of the entire float. When the most sophisticated funds in the world are buying the exact dip you're afraid of, you have to genuinely ask yourself, what do they know that the average retail investor doesn't? The answer becomes clear when you look at analyst price targets. Wall Street views the current price as a massive dislocation from reality. The median price target sits between $71.69 and $75, representing more than 80% upside from where we are today. High-conviction analysts like B. Riley are pushing all the way to $83. We are not looking for a small bounce here. We are looking for a total re-rating of how the market values this company's assets, and the trigger for that re-rating could be closer than most people think. Mark your calendars for Friday, February 27th. That is the MSCI USA Index inclusion date, and this is what we call a forced buying event. Index funds that track the MSCI must acquire shares to match the index composition. They don't get to wait for a better price. They don't care about sentiment or Bitcoin or short-term noise. They have to buy. This creates a mechanical, predictable floor for the entire week, and it could be the catalyst that sparks the next serious leg up. Before I give you my analysis on trade setup, a quick but important reminder: nothing in this video is financial advice. I'm not a licensed financial advisor, and everything discussed here is for educational and entertainment purposes only. Trading stocks, especially in high beta, speculative names like Iren, involves significant risk of loss. Always do your own research, understand your risk tolerance, and consider speaking with a qualified financial professional before making any investment decisions. Past performance, including any predictions discussed on this channel, does not guarantee future results. Here's how we play it. The buy zone is between $40 and $40.25, which aligns perfectly with after-hours support and a major put wall. The conservative target is $45, and if momentum really gets going, the bullish target is $51, aligned with the Fibonacci R1 level. The hard stop stays at $39. That's the structural floor that held last week, and it holds now. But wait, there's one more factor that could turn this into something much wilder. The option chain is absolutely primed. There is a massive stack of call open interest sitting at the $45 and $50 levels. At the same time, short interest is at nearly 41 million shares. That's over 13% of the float. If short sellers try to front-run the MSCI buying event on Friday, they could find themselves caught in a rapid mini-squeeze as they scramble to cover. The coil is tight, the fuse is lit. Could we see a full-blown squeeze? The odds are low, but low probability and high consequence is exactly the kind of asymmetry worth knowing about. Here's the bottom line. Iren is a high beta speculative buy. The ugly transition phase is nearly behind us. The MSCI inclusion this Friday provides a mechanical liquidity floor for the week. The Sweetwater energization coming in April is the fuel for the long-term re-rating. The smart money is already positioned. The question is, are you? If this breakdown gave you clarity and you want to stay ahead of the next move, smash that like button and subscribe to Smart Stock Sam. We drop these setups every week before the market opens. And I want to hear from you in the comments. Are you positioned on Iren going into Friday's MSCI event, or are you waiting on the sidelines? Drop your level and your target below. I read every single one. See you in the next one.